I want to continue our discussion about the markets now with Eddie Ghabour, KeyAdvisors Group and author of Common Sense Bull. Eddie, good to see you. I want to start with the jobs data we got today, that JOLTS report showing that job openings were at a record high last month of 9.3 million. We know the Fed looks closely at that report and has said time and time again that they want to be able to see employment get back to the labor market come back to full employment before they start to really make a move and take their foot off the pedal here. What do you make of today's report, and how might the Fed interpret it?
So I think what you're going to see with the data we got last week and today's data is it probably pushes the Fed back in regards to changing their stance on monetary policy. We believe short term, that's the biggest risk to a surprise for the market that could cause a pretty high volatility to the downside. So I think that takes June off the table. But I think at the end of July, as more and more data comes in, the Fed is probably going to start to pivot, at least position the market to be prepared for some tightening sooner than later, because they've led us to believe that there won't be any tightening this year or next year. We respectfully disagree with that. I think we'll see the Fed really start having to tighten in the first half of next year.
I want to pivot here myself and take a look at those cryptocurrencies, which Jared was talking about just a minute ago, the fact that they are all coming under some intense pressure today. Part of that could be because of what the IRS Commissioner Charles Reddick had to say to lawmakers about possibly regulating those cryptocurrencies. I want you to take a listen to what he had to say, and then I'll have you respond.
I think we need congressional authority. We get challenged, as you're aware, we get challenged frequently, and to have a clear dictate from Congress on the authority of us to collect that information is critical.
I mean, we have to have seen this coming, right? I mean, we all know there's going to be some regulation of these digital currencies. Do you think that's what's happening today, or are traders just taking advantage of the sell-off and looking to take some money off the table?
I think that's one component of today's activity. But if you look at crypto the last month, it's really kind of broken down. Bitcoin has really been challenged to break the 40,000 mark. And so short term, on a technical basis, crypto looks very challenged in the near term. And look, I got hammered on social media about a month ago when I was on your show, and I talked about how crypto was going to be very speculative market, and that some of the cryptos would no longer exist when the bubble actually pops. And so these big moves on crypto should be expected. But at the end of the day, I think Bitcoin and Ethereum have traction long term for portfolios of people with the right risk tolerance. But you have to expect this volatility. But when the bubble does burst, some of the other cryptos that people are speculating in, again, I think they could go to zero at some point in time.
But when you say that some of them are going to have a longer life or be around and be sort of part of the market conversation, is that because it's going to be part of our everyday lives, or is it going to be an asset class, purely an asset class for investors?
I think the answer is both, actually. I mean, you can see it being a bigger part of our life. Some companies are using them as a way to transact business. Then you also have large money managers using crypto as part of an asset allocation, which 3 years ago, they would have never said anything like that. And some of them even called it a fraud at some point in time and was very critical of it. And now you're seeing them start to come around and adding it as part of an asset allocation. So again, I think some of this crypto is here to stay. They will continue to get more traction. There'll still be a lot of volatility. But again, long term, the future does look bright for some of the crypto.
And Eddie, I know every time we've talked to you, you've been very bullish on energy. I'm wondering if that's changed at all.
It has not. You know, it wasn't a very popular call when we said it in December. And again, it's an under-owned asset. We're just now starting to see large institutions come out and becoming a little bit more bullish on energy. We still believe that until we hit peak inflation, maybe sometime late summer, that energy is going to continue to lead the way. And we believe we will see all-time highs sometime very soon. And we think energy as well as financials will lead the way. Look, we have inflation data coming out on Thursday. If that surprises to the upside, that could be the next catalyst to get rates to move up above the 1.53 we're at now. And again, give energy another leg up. So until everyone starts to rotate into these under-owned assets, we're going to continue to be extremely bullish. And so far, it has paid off handsomely for our clients.
All right, Eddie Ghabour of KeyAdvisors Group, thanks so much for being with us.